In the second wave, my view on these sectors is that investors are likely to continue evaluating deals. They have stayed on a firm wicket despite the pandemic, and they will continue to invest in the sector. Residential sector will see more demand from affordable housing, and developers with good track record and execution experience will prevail. Office sector will continue to attract investment. There would be more flexible working spaces, and companies will adopt automation. REITs will gain further traction. Omni-channel retail would be the way forward. The long-term India story remains strong due to rising consumerism and improving purchasing power of Indians. Data centers will attract capital. Warehousing will continue to be flavor of the season. Special situation funds will find distressed deals, especially in hospitality.
Hope you're all in good health and are keeping safe. And thank you very much for taking the time out today and joining us during such a difficult time. It's such a big privilege and a pleasure to reconnect with everyone, our distinguished panelists who are handpicked because of the think input and the rich experience they bring in. And thank you to our distinguished audience for joining us. We've received over 150 registrations, most of whom are CEOs, CXOs, and senior leaders. Many of them are our members and are repeat visitors to our webinars, so which is very encouraging and motivates us to provide even higher levels of dialogue to the online channels as well. For those of you who are new with us today, the Blue Circle is an exclusive community and ecosystem which is curated for business leaders across 6 sectors, which are real estate, logistics, e-mobility, healthcare, energy, and aerospace and defense. We also present socioeconomic insights which ultimately determine the evolving complexion of the market. In response to the COVID challenge, the Blue Circle has also accentuated its digital presence. One of the many modes we employ is our weekly webinar series and our digital publication. In addition to all this, and you'll be happy to know that we're very soon launching an exclusive digital platform curated for leaders, somewhat like the sector-specific LinkedIn for leaders, where we will present them with the opportunity of connecting with people just like them, also house high-quality curated content, have such meaningful conversations like we have and what we're supposed to have today, and give leaders access to business opportunities across our focus sectors. So those leaders who are interested, please do write to us. We've begun our selective outreach and have over 3,000 leaders who signed up in the last couple of months. And today, as part of our Investment Month series, we're privileged to have distinguished leaders join in for the Real Estate Circle's discussion. They're here to discuss real estate preferred asset classes for investments. The lifting of lockdown and travel restrictions boosted real estate assets and improved income visibility for cross-border investments in 2021. Increasing demand from sectors such as e-commerce, healthcare, FMCG are expected to drive the commercial market in 2021. Though the second COVID wave has been a setback, with the rollout of vaccines across all age groups, there should be a lot to look forward to. And we're here to discuss the advances, roadblocks, and the way forward. And now, in the best interest of time, I will just briefly introduce our chair and moderator and then request him to kickstart the session and introduce the other panelists. We have with us Mr. G. Raghavan, who is the founding partner, Next Practice Growth Partners, former CEO, Bharti Urban, NIT, Ingram Micro's Carrier, Independent Director, Anuranjan Healthcare, and Director, Blue Circle. Welcome, sirs, and thank you very much, panelists and everybody, for joining in. And now I request Mr. Raghavan to please chair, moderate, and introduce the other leaders. So, thank you.
Thank you, Siddharth. So on behalf of Blue Circle, and on behalf of the distinguished panelists, and on my own behalf, I extend a very warm welcome to all the distinguished participants to today's webinar. It's only appropriate that we start this session with a little bit of touch base to the background, which Siddharth has already done. The second wave has struck us. It has been a setback for now. We are smack in the middle of it. Equally, never in history was there one unanimous agenda to fight this pandemic. Individuals, corporates, and governments in India and all over the world are channeling all their might to help us get through this. But we have to remember that this uncertainty is for now, for the immediate future. With actions by everyone and with the rollout of vaccines across all age groups, we have to visualize a better near term, and certainly a long-term future, and a better future not too far from today. With this background, we will open up today's discussions on the real estate sector with a focus on preferred asset classes. There are Blue Circle member participants today from across developers, potential investors in residential, commercial, and other asset classes, as well as senior executives who are carrying the responsibility to carry on with this industry and grow this industry. We are fortunate to have a panel of experts who have personal hands-on experience of not only managing large portfolios themselves, but have worked closely with other investors as well as developers across the board. A great pleasure, ladies and gentlemen, to introduce to you the panelists of today. First is Mr. Sakar Mawandia, Director, CDC, which is a UK government's development finance institution. He leads their real estate investments in South Asia and comes with 18 plus years of experience across commercial, retail, residential, hotels, warehousing, both in equity and debt funds in the last several years. In the past, he has worked with the government of Singapore's Sovereign Wealth Fund and Kotak Private Equity. That is Sakar Mawandia for you. Second is Mr. Anuranjan Mohnot. He is the co-founder and managing director of Lumos Alternative Investment Advisors. Earlier, from 2011 to 2020, Anuranjan was the founding managing director and CEO of Amplus Capital Advisors, where he was instrumental in successful exits of 2 domestic real estate funds. Third is Mr. Jai Mirpuri, country head of ESR. He has over 16 years of experience in real estate investment and fund management in Asia, including 11 years of investment and organization building in the Redwood Group. He previously held positions at Deutsche Bank and Capital One Bank. I'm very, very privileged to be moderating this session with such experts who bring a very large and wide breadth of experience. So what we're going to do is we're going to request the panelists to actually make their opening remarks. I would invite Mr. Anuranjan Mohnot to actually give his opening remarks.
Thank you, Mr. Raghavan. It's indeed a great pleasure to be here on this Blue Circle seminar. What we have seen in real estate now in last 1 month is like a complete stay on the sales, new inquiries, etc., etc. But just prior to that, the previous 6 months of this 1 month were really one of the best, I'll say, best sales and best months for real estate developers across India. A lot of segments, including residential, plotting, did really well. We saw huge interest of investors in real estate segment. In fact, in some cases, we have seen a little bit of price appreciation, etc. This whole real estate, I'll say, the market revival happened on backdrop of a lot of concerns, a lot of things which we saw over a period of COVID immediately after March 2020, where we saw that the sales were dried up and there were serious concerns on sales, serious concerns on market, everything. And then suddenly, after November, December, the market revived like anything. And this was helped by a lot of government incentives, including stamp duty cuts in premiums, etc., etc. And the whole focus of government is now to support real estate so that a lot of job creation can happen. The future, what we see after, say, what we believe that the current phenomena of COVID probably may be there for next 1 month or 2 months max, because immediately after that, probably vaccines will be available at a at a very, very large scale. People will be coming out and doing all these things, doing their buying decisions. The whole pent-up demand of last 5-6 years, which was I'll say which accumulated over a period of 5-6 years because of demonetization, because of GST, because of RERA, because of a lot of issues related to market uncertainties. That's all came up in last 2 quarters of December and March, and that probably may continue for a long time. And what we have seen also is that the overall liquidity in the system, which all central banks are pumping across world, that is also fueling real estate growth. The cost factor also, the increase in prices of steel, cements, and etc., that also is also contributing to escalating the real estate prices. And what we can see is that over a period of time, when the whole real estate cycle revives, it will be little bit of inflationary, and we will see that people are coming back to buy and take their real estate decisions, particularly in the residential segment. In terms of segment, what we saw is that the plotted developments have done really well across all metro cities, peripheral areas, and tier 2 cities. People are looking for larger specifications in metro. They may be they are willing to move out a little bit away from their city, away from the central CBD area or SBD area, but they are looking more of a larger configuration, and which could suit them the work from home kind of thing. The interest of private equity investors in residential segment is also coming back, and which was stopped for quite a good time, and we are seeing a lot of transactions which are focused on stress assets revival. We are seeing a lot of transactions at a very, very initial stage of development also.
Anuranjan, that was a very good setting that you created. I know personally that you have a lot of experience in residential as well as commercial, including office area. I'm going to be coming back to you with a few questions, which I'm sure the participants are very interested to know about. Yeah. So thank you so much for those opening comments. I will move now to Jai Mirpuri to give his opening remarks.
Hi, thanks everyone for joining this Blue Circle session. As Raghavan mentioned, I'm Jai Mirpuri. I'm the country head of ESR India. We're a developer fund manager focused on the industrial and logistics warehousing asset class. We've been operational on the ground for about 4 years. I think that one thing that we do need to say is that some of the impact of COVID-19 over the last 12 to 14 months has been that there has been a paradigm shift in terms of internet usage, online shopping, e-commerce, delivery, and so on, which has actually led to in some ways a positive impact on the demand in our sector. However, the picture isn't that rosy, because like everyone else, we are affected by operationally affected by not having, let's say, the adequate labor force, or not having not being able to operate as normal. I think input costs have also gone up significantly in the last 6 to 8 months in terms of steel and cement prices. So we are affected by that, but long-term view is that as Raghavan mentioned, the immediate future, there are challenges. We do believe that the long-term runway for this sector and for India's growth potential is long, and so that's what keeps us going.
Thank you very much, Jay. That is a very good intro into a little bigger picture of the market. Jay, you have personally a lot of experience in logistics, warehousing, industrial, data centers, etc. So I'm going to be coming around to ask a lot of questions in these sectors, because these are not very often and very widely communicated stuff. I think our audience will be very much enriched by hearing your views on them. So please hold your thoughts. I'm going to be coming right back to you. So let me move over to Sakar. Sakar Mawandia, would you like to give your opening remarks, please?
Thank you, Raghavan, and it is a pleasure to be part of this webinar. So I'll start my with a quote from Thomas Edison, which depicts the current situation. So there is a great value in disaster because we can start all over again. So reinventing the new reality is the way forward for all asset classes in real estate. So if you see the pandemic, which it has been a unique shock in the sense that it has triggered both demand side as well as supply side disruption simultaneously. On the demand side, what we see is there has been loss of revenue, there has been weaker growth prospects, and which has led to fall in consumption. However, on supply side, we see that there is restricted movement of labor, as well as there was a pause in economic activity. However, in last few months, we have seen that the economy has shown resilience and is slowly moving out of pandemic. GDP is likely to be positive in FY22. Manufacturing and services PMI has been consistently showing expansion in activity. Stock markets are soaring, AUMs of mutual fund is expanding, FDI has been strong. Some of the other economic factors that you see, like railway freight, petroleum consumption, GST collection, e-way bill, auto sales, cement production, have all been a rebound in the last few months, which is reflective of the growth momentum in the economy. RBI is likely to support economic growth by keeping the key policy rate constant, as well as maintaining its accommodative stance. Retail inflation will hover around 2 to 6% range, which is beneficial for the economy. Consumer confidence in the last few months have also been positive, and it has been much above from the low that we saw in September 2020. All of these bodes well for the real estate sector. Few sectors have grown during the pandemic, like warehousing and data centers. However, few sectors have suffered badly, which includes hospitality and retail. Office demand was resilient, residential has picked up, and new age segments like student housing and co-living space has also suffered. In the second wave, my view on these sectors is that investors are likely to continue evaluating deals. They have stayed on a firm wicket despite the pandemic, and they will continue to invest in the sector. Residential sector will see more demand from affordable housing, and developers with good track record and execution experience will prevail. Office sector will continue to attract investment. There would be more flexible working spaces, and companies will adopt automation. REITs will gain further traction. Omni-channel retail would be the way forward. The long-term India story remains strong due to rising consumerism and improving purchasing power of Indians. Data centers will attract capital. Warehousing will continue to be flavor of the season. Special situation funds will find distressed deals, especially in hospitality. So now pandemic is a known enemy and vaccination has been rolled out. So nationwide lockdown seems unlikely, but there could be regional lockdowns. However, system is better prepared to deal with the pandemic. Hence, I'm more positive on the outlook of the sector, and the real estate sector should recover from the second wave in next few months.
Thank you, Sakar. That's not only summarizing from a high level of economy and what you're looking at, how you are looking at it from where you are. Your views, especially representing a UK fund, is very, very relevant and appropriate. So thank you very much for those views. And I know that you have experience basically across sectors. I'm going to be coming back to you with some questions on particularly data centers, office, and a couple of other sectors. So ladies and gentlemen, before I break it up into questions for the individual panelists, I wanted to add a couple of comments from my own side. A statement has been floating around lately in many, many WhatsApp groups. And this says, we're all in the same storm, but in different boats. I should confess that the first time I heard this expression is from my dear friend Sridhar Dharmarajan, who works for Hexagon. He's a CEO for Hexagon. But I think it summarizes the situation for the real estate industry. While we look at the industry as a whole passing through a certain amount of transition with the COVID situation, I think from an investment standpoint, only those will win who actually are discerning and understanding which asset class is in which boat. Now, if you look at the whole real estate sector, we can look at it in multiple subclasses. And I'm sure that each one of you has interest in one or two more of those classes, and there are questions in your mind which you're seeking to look for answers, I'm going to do my best to get the best insights from the panelists today. If you look at the residential sector, I'm sure people are wondering what's going to happen to the consumer trends. How is the demand going to be? Is the pricing going to be higher or lower? Is there an opportunity for investing in alternative asset classes? On the office space, there are a lot of questions. Work from home has really been like a cat among the pigeons. And there is a lot of questions about where is it going to settle down? And there is an opportunity in terms of REIT. Is it something that is come to stay? And what is the implication of that? Retail, when will people go back to shopping? Is there a favorable policy on FDI? What's going to happen in this sector? Hospitality, always a question about what's going to happen to the hospitality, particularly the business hotels in cities, resorts in non-cities, and questions like that. Data center, with the privacy regulations coming in, with wanting to have the servers of the country in the country, and so on. What is really going to happen to that particular segment? Logistics and warehousing. I should say that these are lesser known segments, but I am very, very happy that we've got two people on the panel who are experts in this, and they'll be able to talk to this in a lot more detailed manner. On the institutional side, you've got the healthcare sector as well as the education institutions. Healthcare is a very, very important topic of the day. We are seeing the current healthcare structure being superbly inadequate to meet the current demand. So what's going to happen? Is it going to be a new home for a lot of investments? And industrial infrastructure, what's going to happen to the manufacturing sector? Is a China plus one strategy real? Is there going to be a lot of manufacturing happening in the country? Is there a production-linked incentive scheme that's been rolled out? Is it going to really kick in a lot of manufacturing? Is there a lot of opportunity in that? These are questions which are, I'm sure, floating around in all your heads. So I am not sure how deep and thorough we'll be able to answer all the questions, but if there is a chance of addressing most of them, here is the panel that can actually do it. So without much ado, let me get on with the first question that is primarily on the residential sector. Can I go to you, Anuranjan, about this? Basically, what are the consumer trends that you see, and how are they likely to shape up the residential market in the next 2 to 3 years? And how do you really see it? And how do you see the impact of affordable housing project by the government of India? So can you talk about those things for a few minutes?
Absolutely. Yeah. So what we have seen is that consumer is now more confident, okay, because he has, the buyer has sailed through one of the toughest time, whatever he has seen over the last 1 year. A person's job is now saved, and he has thrived through, this pandemic. He is more confident in buying. Plus, in terms of affordability, the interest rates are all-time low. SBI interest rate is approximately 6.7, 6.8%, which is historical low, maybe 15-year low or 16-year low. Third thing is that the prices has not risen in last 5-6 years very significantly. So affordability index has improved. Fourth thing, the interest level of buyers is more in plotting, more in taking larger specification. It means a person who was aspiring to buy a 2 BHK is looking for 2.5. A person who was looking to buy 3 is looking for 3.5 or 4, something, even if he has to go little bit outskirts of his main city. Third thing, what we have seen is that work from home, all people are considering that it will remain, at least for 3 days, 4 days in a week. So probably it may have people may have a flexi working where they need to go to office 3 or 4 days in a week, and rest all will be at home. So the idea is that they spend more time at home, so their space within home should be much better than what they used to have earlier. What we have also seen is that the demand in tier 2 city is also picking up well, and particularly cities surrounding to the metro cities like Mumbai or Bangalore or Chennai. people don't mind. People are inclined now more to buy in those areas, and the demand is quite good there. In terms of industry, what we have seen is that some industries are doing extremely well, like IT industry, pharma industry, banking is recovering in a big way, some manufacturing activities. So this city like Bangalore, which are very, very dependent on IT spending, cities like Chennai, which is very dependent on manufacturing and IT, Pune, which is manufacturing plus IT. These all cities are doing extremely well, and these all are supported by various government incentives. Very recently, what we have seen is in Bangalore, the stamp duty relaxation was provided by state government. In Maharashtra, the reduction in stamp duty was huge success. In fact, they crossed all their targets of all previous years, despite huge reduction in the stamp duty. So what we anticipate is that probably after the second wave, maybe in next 1 or 2 months, government may come out with another window of probably 2-3 months where they will allow again this stamp duty reduction, and probably we may see another spike in residential sales what we used to have.
So Anuranjan, basically you are optimistic about the residential market.
Extremely
and
optimistic.
You are feeling some. Can you hear me?
Yeah, I can hear you. I'm saying I'm extremely bullish on residential. See, what has happened is that after RERA, particularly, the filtration process was quite good. A lot of bad developers who are not able to perform, they are out of business. So at least 60 to 70%, the industry is now consolidated. And we have much more filtered, much more serious developers in market. And, the customers are now more confident of getting their delivery of home in the, in the time, whatever was suggested by developer. So market, in fact, has improved a lot. So the funding is available. The market, that means the delivery mechanism is good. There is a huge pent-up demand because last 5 years were like washed out. Okay. And global liquidity is there. So
thank you. On that note, Anuranjan, that's a very, very positive note. I really think you summarized it, not only for the recent past, but also how you see it in the future. I know you have a lot of experience in certain other sectors. I'm going to take the full juice out of you by coming back to you about some questions in a couple of other asset classes in which you have experience. But staying on the residential, I have a question for Sakar. Sakar, so what's your prognosis for the alternative asset classes like student housing, co-living, senior citizens, locations, and things like that? Do you see? I mean, I'm sure that in the UK these are all very well developed residential asset classes. Do you see that happening in India?
No, definitely, Mr. Raghavan. So if you see by numbers, India has around 34 million college students, a third of whom are studying outside their home state. Demand supply gap, if you see, it's huge. Only 20% students getting a hostel bed in the university. And if you see developed markets, there are actually student housing REITs which are doing very well. And in India, probably this is effectively at a very nascent stage. If you do a study, there would be around 200 operators doing student housing, but that is not the specialized student housing that you will see in developed markets. So what people are doing here is they will take a residential apartment, they will convert it, retrofit it to a student housing, which probably may lack in safety and the various amenities that get associated with a proper student housing accommodation. So if you see in 2018-19, when we started looking at this space, probably we zeroed it on, or effectively institutional investors have zeroed it on few opportunities. But I think due to pandemic, the pace has bit slowed down. But I think post the pandemic, probably there would be a thrust on this sector. And I see probably apart from residential, these new age sectors would have more focus from institutional investors.
So you do feel bullish that these sectors might get the benefit of investments into propelling these sectors. Is that right?
Yes, because these are effectively a yielding asset. So as office has grown, warehousing has grown, I don't see a reason why student housing will not grow.
Has it been lagging only because there has not been an organized player in this sector?
Largely, yes, because you need very specialized skills. There have been few companies in India who are operating in asset-light model, which probably may not be relevant for, say, real estate developers. But probably if you marry both asset-light and asset-heavy model, there are few models there, PropCo, OpCo. Effectively, models are being developed by the developers as well as investors. But I think if you amalgam both asset-light and asset-heavy model, there is a play there. And I can assure you a lot of institutional investors are looking at this space.
So that's very interesting because definitely there is a pent-up demand for these asset classes in the country. And if there is an institutional way of really funding these asset classes, so this market could very well develop. Thank you very much for that perspective. Since you are managing a UK-based fund, I have a question from one of the audiences, one of the participants, Mr. Surale Raj, is the director of Tamil Nadu PropNext. His question is, what is the best way to do marketing real estate projects to reach out to NRIs around the world? So do you have any quick answer to that question?
So I think, see, for when I was managing few projects, residential projects, I think there were specialized agencies who do market these projects. But I think what we don't see in those marketing initiatives is that even NRIs are actually looking for gated communities and they are looking at price points. And they are effectively looking at area which you project to them and you get that area. So the super built up area concept is not there in overseas market. So if you say that you are selling 2000 square feet apartment and you visit site, it is only 1000 square feet. So I think transparency is very key if you are selling to overseas market, and you need to be very clear on the amenities that you are providing.
Well, I guess with the RERA coming in, people are compelled to declare the carpet area as defined in RERA. So I think a large part of that problem is gone. I think his question is more about how do you reach out to NRIs and how do you market your residential projects and so on.
So I think probably I'm not the right guy to.
We'll come around. I'm sure this is an interesting question, definitely thought-provoking, and some answer you've already given. Transparency is an important criteria because people are sitting miles away, and if there is not transparency, there's opaqueness. Obviously, the courage with which they can take the decision goes down. So I think you touched upon an important point. So I'm going to move away from the residential sector, and I'm going to go to the commercial sectors. So the first off the boat is the office sector. So I'm going to ask Anuranjan back again. Anuranjan, you touched upon the work from home concept. When you look at the office space, not only work from home is a phenomenon, but there also is de-densification, which is happening. Yeah. And there is also significant IT demand globally, and definitely within India as well, due to digitization, which has been given a real push in the last 18-24 months. People who had not planned to take on digitization projects are taking it up in a hurry as it was going out of fashion. Yeah. So there's a phenomenal amount of push for IT-driven office space requirement, but there is this whole, headwind in the form of work from home. So what do you think is likely to be the balance in this particular office segment? And while you are at it, you can also talk about whether you believe that fractional ownership as a concept is likely to come up in the offices. One is large IT parks and business parks and so on. But there are also lots of other commercial buildings which are not necessarily part of a large family of commercial park. So do you think there is an opportunity for fractional ownership fueled growth of that sector?
Yeah. So, in office, it's not either or, the work from home will be there. At the same time, we will see that the office space continue to grow because people grow personally also and professionally also when they have a systematic office and office environment. A lot of work can be done only when, you have a very, very organized environment to work there. So everything will continue. In fact, last 1 month we have seen significant deals happening in Bangalore on the new lease transactions. So the office demands will continue. Issue is that how big it will be. So what we have to, what I've seen is that, in last 1 year, particularly, as you mentioned, that there's a lot of new IT orders, a lot of new expansion which has happened in Indian industry, in Indian IT industry. So if our IT revenue has to double in the next, say, 8 years, 10 years or so, at least 60 to 70% of the existing office space in Bangalore probably will have to be replicated. And that kind of demand, maybe, we will see. So the office will be there. Office, it cannot be substituted. In fact, we are becoming more powerhouse, more global powerhouse in IT. And in fact, other than that, we are also expanding to new areas in terms of pharma, or let's say in Ahmedabad, we have seen that a lot of transactions in GIFT City has increased. A lot of financial institutions have shifted to their base to GIFT City now, and a lot of new lease transactions. In fact, Bank of America has recently taken 4 lakh square feet in GIFT City. So we are having a huge IT demand across Bangalore, Pune, and it may continue to go.
Let me ask you one sort of a
Yes.
end game question.
Yes.
When do you think, which year do you think the total office space occupied in the country will match, let's say, 2020 occupied space? Will it happen in 2022? Will it happen in 2023? What's your best judgment?
I will say maybe next 1 or 2 years it should happen.
Maybe by 23 at least.
Absolutely.
It must happen.
Absolutely, it must happen, and maybe more earlier than that.
Anyway, that's a
it's a guess.
I will
if I have to say that if the country has to grow on IT revenues, if we have to double our revenues, IT space has to grow, and it has to grow exponentially. It cannot be 5-10%. It has to grow at a very, very higher base, and that base will provide a big support to IT demand in country.
Thank you. I'm going to move to another part of
fractional.
the office.
You've also mentioned about fractional ownership.
Yes. Sorry, please go ahead. Yeah.
So what I've seen is that in recent time there are a lot of fractional ownership and transactions which are floating around. A lot of companies which are there. We studied this business model, and what we found that there are huge uncertainties in terms of legal structure of this particular thing. Probably a lot of clarity is required from regulators, whether a person, whether any company can receive anything less than 1 crore, which is prescribed by SEBI under AIF regulation, publicly, without floating proper registration, without floating proper PPM. Whether we can have a unregulated entity, in fractional ownership. What will happen if there are disputes between the shareholders intershare? Because these guidelines are not clear. We say that it is a fractional ownership, but it is actually it's a buying of a share in a company where the ownership is there. So it's a fractional ownership in the company, and which is already there. So we are bypassing the company law. We are bypassing the SEBI law, and it's a very, very opaque kind of transaction structure. Somebody by own has put a self-imposed limit of, say, 10 lakh rupees, 25 lakh rupees, which is not the case which SEBI has envisaged. SEBI says that if you are taking 25 lakh rupees, register under PMS. And if you register under PMS, then you need to have a different regulation for PMS, your capital structure, your everything. And if you are taking more than that, then you have to register under AI. So these companies
said another way. Said another way. See, there is a certain amount of yields that are happening in office spaces, right?
Yes.
And those yields typically have been better than the yields for residential investments.
Yeah.
Now, if you look at the investment appetite of retail investors today,
Yes.
they would really like to participate in a yield level as you find in commercial spaces. From whatever you are saying, it is clear that perhaps there is no structured vehicle through which people can participate in this segment. So I'm going to have you, sorry, go ahead.
So on yield, savvy as investors, it's a REIT. Okay. So if you want to have an exposure on an office space, participate in a REIT. Okay. But REIT has its own guideline. So you cannot have a structure which is REIT-like, but not registered under REIT.
Exactly. I think you hit the nail on the head in the sense that for retail investors who would like to take participation in the fractional ownership and then enjoy the yield levels of an office space, do not have a very good vehicle other than the only long route of REIT at the moment.
Absolutely.
This is a good segue for me to take the question back to Sakar. Sakar, when again looking at this REIT as a vehicle, I think it's become reasonably proven vehicle, at least in the last few years. So what do you think are the implications of REIT from a developer perspective and from, let's say, occupiers perspective? What changes? Does anything change? Do the developers have the luxury today of saying, okay, I'm going to look at my office development not as something that I build, own, and keep it forever. I have a cycle now. I can turn it around in a cycle. So do they feel like that? Could I turn to Sakar for your comments on this?
Yeah, sure, Raghavan. I think, see, if you see the banks and NBFC credit has actually dried up for the sector. It's largely good, great developers who are getting this credit, and it's already reached peak. And with the concerns that banks particularly have in the sector and the NBFC not being able to lend to the sector because of historic issues, I think this is a new avenue for the developers to raise capital. Stability, REIT has stability of returns, REIT has yield compression, and these two factors will attract institutional investors towards REIT. So just to give you a number, so if you see the market cap of these three REITs which are listed, which is around $6.6 billion, and if you see the market cap of the Nifty Realty Index, it's around $22 billion. So currently 30% of the market cap is being commanded by these REITs. And according to an estimate, the retail space in India is around 280 million square feet, and valuation would be broadly around $30 to $35 billion.
Is it only office or is it?
It's only office. It's only office space. So effectively, you have a huge area to cover. So from 6.6, you can actually reach $35 billion, and there is huge potential there. So for developers, it is, I would say, alternate means of finance to raise capital. And for, I think from users' perspective, probably it may not make any difference, because if you are either a tenant base, effectively it won't make any difference. Either you are part of a REIT or you are part of a normal office. It should not impact the tenants per se. But I would like to say that developers should learn a lesson in listing REITs, because if you will recall earlier in 2000 pre-GFC period, there were few AIM listing in London Stock Exchange. So what few developers did, that substandard assets were listed during. So that mistake we should not repeat, because that will create a dent in investor confidence. Good sponsor quality and grade A assets are required so that investor confidence is built in this asset class, because all the three listed REITs are a very good asset base. But subsequent REITs, we need to see that all the grade A assets are there.
Thank you. Those are very valuable comments. Thank you so much. I'm going to be moving to another very, very important part of the commercial segment. There are two important segments. I think listeners, participants would really like to know a lot about those. One is the data center market. So I want to turn to Jai. Jai, you have a lot of experience in data centers. How real are the implications of the data security, data privacy laws? How real are this whole concept of servers of India have to be staying in India? And how deep is the market? How is it in relationship with like a residential market and an office market? And what is the runway in this market? Could you speak a little bit about the data center market?
So there are two aspects to it, right? I mean, one is, of course, regulations that require that local data needs to be locally stored, right? And that gives a certain impetus to the asset class. The other aspect is more fundamental, which is that, if you have so many hundreds of millions of online users, right? So you're using Facebook and YouTube and Google and TikTok and Amazon and all such websites and Netflix and so on. The need to have data centers that are located where the data traffic can actually reach these consumers with low levels of latency, low levels of packet loss and things like that also is a real requirement. I think we are at a fairly nascent stage as far as data centers is concerned in India. There's a long runway to go. The two cities that shine when it comes to data center asset class are Mumbai and Chennai, because that's where the submarine cables have landing points in our country, and that's where the current sort of crop of operators are most eagerly looking. You have major challenges here, of course, because the kind of power requirements and internet fiber optic and requirements are massive. And you need significant amount of cooling for these data centers. So that's a challenge, and I think it'll grow. I think that the asset class will grow quite steadily. Primarily initially throttled by availability of power and connectivity. So that's my view. I know that there are a few data centers that are being floated in markets like like Bangalore and NCR as well. Those are of much smaller size, I would say. But the big ones, as I mentioned, are Mumbai in particular, the Navi Mumbai belt, and then in Chennai, more the North Chennai, because of the fact that it's in a better floodplain compared to your sort of southwest of Chennai.
So, Jai, are there serious concerns about environment and energy guzzling that could come in the way of this business growing in the country?
I see there is definitely, a huge energy consumption, right? And most of us don't realize how much energy goes into, providing us with the Zoom, webinar where you have 55 people on, or, hundreds of millions of people, watching Netflix every night, or, watching the IPL on Hotstar, for example. Thankfully that's they've suspended that for the moment. But I think that, see, those concerns are definitely there. There's a huge amount of power, a huge amount of cooling that's required, that that goes into it. Now, obviously, not a very small portion of this power is coming from renewable sources, and so that's definitely a concern. And I think the industry will develop to become more and more energy efficient, to try and use less power per kilowatt, or less power per sort of megabyte, gigabyte, terabyte that's going through the data centers. But it's definitely a concern. I mean, we need to continue to, and I think this is global, right? This is a global challenge, that we need to continue to make data centers more and more efficient from a power perspective, and the impact it has on the environment.
So, who have been major investors in the data center business in the country?
So you have the usual players. You have a few players who've partnered with international operators that are operating from a occupier perspective. You have you use a term called hyperscalers, which are the likes of Amazon Web Services, your Google, Facebook, and so on, that Microsoft, that use significant amounts. You have a number of players that operate in the few markets that I mentioned, and they have, some of them have partnerships with telecom companies like Singtel and NTT and so on. So the Japanese telecom, Singapore Telecom, there are partners who are developing data centers across the market.
Is there a lot of work that major users like Amazon or Google, for that matter, are they doing any kind of a research are they pumping in a lot of money to do research in terms of how to bring energy consumption over time, how to minimize the environmental damage over time? Are you aware of any research and investment?
There's a lot going on. There's a huge amount going on in that respect. There's a lot of it to do with how do you make them solar powered, right? And depending on the location. I was reading an article some time ago as to how do you is there a is there scope to actually have submarine data centers where the water, automatically cools and dissipates the heat that's generated by these servers? There was talk about having data centers in, places like Greenland where the weather, is just normally. But I mean, and as we know, right? I mean, computers and servers have become more and more and more efficient, over time. I think that is something that will continue. So definitely. And the good part is that this technology is globally fungible. So when it'll very quickly, disseminate across the globe once new technologies are proven and tested.
Thank you, Jay. That was very, very helpful. Before I come back to you on another segment of the real estate asset class, I'm going to go to Sakar. I have a question for you, Sakar. In terms of, let's say, from a CDC perspective, have you had any major investments done in the data center market anywhere in the world? And are you looking at India for some serious investments?
Yeah, we are looking from CDC perspective, but we are mainly looking at operators, the operators who are running these data centers, and not from real estate perspective. Because from real estate perspective, I think the issues that you highlighted, environment and energy, is core to CDC's philosophy. So unless we are comfortable that the energy consumption is lower through whatever means, and it is more environmental friendly, only then probably we'll invest as a developer. But as a service provider, I think we are interested in this space. This is a good space to be in, and I think a lot of capital would be chasing this asset class. This could be the new sunrise industry for India, like warehousing was a couple of years back and currently. So data center would be has a good future.
Are there any specific funds around the world which are focused on data centers that they're looking at?
I think all the major sovereign wealth funds are looking at it. So I won't rule out any of the funds which are not looking at it. Probably data center will remain an exciting opportunity for effectively all the major private equity funds, sovereign wealth funds, and DFIs like us.
Okay, thank you. I think there's another very important segment which is emerging, which is logistics and warehousing. And I want to go back to Jay. Jay, what are the drivers that are really supporting the growth of logistics and warehousing sector? And a subset of the question is cold storage warehousing market a real potential? With the recent farm laws, which perhaps encourage ability for the farmers to hold on to their produce and their ability to move it across the country and so on, is there really a market for cold storage in the country? So how does the overall warehousing and logistics sector look like?
See, I think that, one of the sort of tipping points for warehousing and logistics in India was, of course, GST, the GST bill that was passed in July of 2017, which unified India, as a single market. There's a anecdote that we used to share that, if you go online and buy a toothbrush and toothpaste, sometimes, it would be cheaper for the e-commerce website to send you your toothpaste from one warehouse and your toothbrush from the other warehouse, because of state taxes and octroys and things like that. Now the GST bill did away with all of that. A lot of those decisions are being made, from a fundamental perspective. The COVID crisis actually interestingly turned things a little bit, because there were, for example, over-reliance on a single very large distribution center. If that distribution center happened to fall in a red zone last year, led to some people saying that, okay, maybe we need to temper our, over concentration of goods in one particular location. But what that has led to actually is that there's a lot more focus now on inventory management, on process and operations management, bringing down the cost of logistics for companies significantly by focusing on these sort of process and operational aspects of supply chain, and that has led to people like us building much larger footprints for customers. So I would say that a few years ago in 2015-16, as Amazon was sort of just entering the country, their typical box sizes or warehouse sizes used to be 2 lakh square feet, 3 lakh square feet. And more recently we've been building as high as 6 lakh, 7 lakh, 9 lakh square feet boxes, including mezzanine space for them, which has basically then allowed us to actually focus on quality, focus on the infrastructure, focus on providing the amenities that you would normally see in developed markets, such as driver restrooms, such as your F&B for the workers, such as more office space associated with those, for your operations managers and things like that. Also, you can have one warehouse serving multiple states, right? So we have a warehouse in Calcutta that from there, a large part of the northeastern states can also be serviced. And so we have both Flipkart and Amazon in that park in Calcutta, and they operate out of there. Now, different customers, and you talked about cold storage. I think different customers, depending on the goods that you're trying to distribute, will have different requirements. So if you're a company that is into food and beverage, you need your warehouses to be a lot closer to your end user. For example, if you were like Mondelez or which owns Cadbury's, you need a warehouse within 1 hour, 1.5 hour of your sort of shops that are selling the chocolates. You need temperature control to keep them within a certain temperature. I think cold storage is definitely, a big asset class. Overall, the size of cold storage compared to the bigger warehousing, distribution pie is small. If you look at, developed markets, you would say that not more than 10 to 12% of the overall space is dedicated to cold storage. You also have a significant amount of investment that goes into plant and machinery, which depreciates at a faster level. You also have a lower depth of customers, right? So in the number of players who are in cold storage, even in a market like India, is much fewer than players who would take your ambient warehousing space. So that makes it a bit more specialized. We do cater to it. So we build industrial parks, and so within a park, if a cold storage occupier needs a certain amount of space, we could build it for them. But then we look at significantly higher lock-ins and ask them to do a lot of the plant and machinery investments, because then it becomes more of a depreciating investment than just real estate income.
So if you look at the warehousing space, you got the large captive warehousing spaces by the e-commerce players, and you got probably captive warehouses of the manufacturing units, right? If you look at a real estate developer, where is the investment play available for a real estate developer?
I mean, it depends on the size of the developer, right? If you actually are able to buy land, make the investment to build, large boxes that are 5-6 lakh square feet, which would mean that you'll need to at least buy, something like 30 to 40 acres of land, take the time that it takes to hold on to that, lease it up. You can play across segments, right? What we've seen for local developers is that they play in the more sort of mid-market segment, where you're talking about smaller warehouses, maybe 1 to 2 lakh, 3 lakh square feet. You're talking about maybe 10 acres of land, 15 acres of land, and building to a specification where they ambient warehouses where they charge less than what an Amazon or Flipkart would be required to pay, because the kind of tenant improvements that go into that building. So it depends on what kind of developer you are. If you're someone like let's say Embassy or Hiranandani, they're playing in across the segment. If you're a local developer out of let's say Bangalore or Hyderabad, we've seen them playing in the more mid-market segment, ambient warehousing for people like, let's say, Hindustan Lever or F&B companies like that are distributing, let's say, packaged goods.
So do these opportunities come purely as just a hardware and a core, shell and core kind of a thing, provide and collect lease rentals and get out? Or does it come with operating arrangements, including the technology that has got to be put in, the operating systems and all that? Is it a combined deal, or is it usually like a hardware alone and you get out?
It's usually we provide the core and shell. We do believe that our customers have their own requirements with respect to things like racking, automation, conveyor belts, forklifts. They design the space within the warehouse based on their operating models. We don't profess to be operational experts, so we play the role of real estate landlords. So we lease the space out. We also like the fact that they make the investment into things like the racking, etc., because it makes them more sticky. So even though you may sign a 5-year lease with, let's say, a 2-year lock-in or a 3-year lock-in, in reality, unless something really fundamentally was pushing them to either downsize or move, you would like to see them stay on for longer so that you can have that stable cash flow.
Thank you, Jay. They were all very useful and very insightful comments. Appreciate it very much. Now I'm going to leave this sector and go off to an interesting sector, which is the retail sector. I want to move to Anuranjan. Anuranjan, so you've seen a lot of things happening and you are a keen observer of the battle between e-commerce and physical commerce. So in this kind of an environment, where do you see the retail malls? What is the place for the retail malls going forward? What kind of balance is it going to settle down in? And what is really required to make this retail an attractive investment destination for anybody who wants to invest in the retail space?
So, I'll give you an example of a few locations. Let's say in Ahmedabad, what we have seen is that very handful of malls survived, in last 10, 15 years. And the reason is that, over a period of time, people have moved their buying preferences to online, whether it is grocery, whether it is your garments, or whether it is your anything, So electronic items, everything is online these days. But retail is also experience. So there will be a mutual survival of online as well as offline. But in offline, a tenant mix will play a very, very big role, major role in survival of all these retail spaces. So if the mix is good, the malls will survive. If the mix is not good, it may end it into a dead retail destination. We have seen at least 10 malls dying in Ahmedabad, and then they were later converted to a residential or commercial spaces. So it's all
about tenant mix. If you look at the retail space, broadly speaking, you've got the fashion, where you go and buy stuff. Yeah. Then you've got the F&B, yes. And you've got certain experience centers, family experience, family entertainment kind of a thing. Right. So from what I hear you say, there's going to be more of, let's say, family entertainment and F&B, yeah. Less of pure play shopping, right? Will it lead to the malls becoming smaller in the future?
No, see, the size of market is also expanding in India. This is the biggest strength what we have in India. So we are a growing country. So the per capita income is increasing from basics to a discretionary spend. Over a period of say next 5-10 years, our per capita income will be around $3,500 to $5,000 per person. Around $5,000. So there will be a lot of discretionary spend, and for all these discretionary spend, people would like to have a feel. Will have to go and do shopping there. So the survival will be there, but survival will be very, very selective. People, the malls which are able to provide that kind of ambience, that kind of feel, that kind of variety in the shopping, they will survive. The rest all will just vanish away. Like I will say in Ahmedabad, there is only one mall, which is Alpha Mall, and that provides a whole solution to the shopping pattern of India. The size of population is very large enough to take care of a 1 or 2 malls in India. So it's
Anuranjan, I don't know why, but I always feel like asking you a question about professing about the future. But here is a question for you, right? Pre-COVID versus during the COVID days, right? Post-COVID, when things started opening up, right? The footfalls, I've heard of various numbers. It was around 20 to 30% of the pre-COVID days. I'm not talking about the right now April lockdown period of time. So 20 to 30%, maybe 30% is all the kind of footfalls that is there. So in your opinion, okay, when do you think it will come to 100% of pre-COVID footfalls? In which year do you think it's going to come?
Next 1 year.
Next 1 year. That is quite,
Within 1 year.
that's
See,
quite strong. That's nice.
See, US is now completely opening up by July. UK, Europe, everything is opening up within next 1 month or 2 months. Unfortunately, we delayed vaccination. Our vaccination will be over in all major cities in next probably 5 to 6 months. And we should be done. I think COVID will be passed in next 1 year.
Right now, at this point of time, what you said is like music to my ears, and I'm sure it's music to several people who are right now in the thick of it, but are not able to see a future. But really appreciate this.
I will meet you without mask within next 1 year.
Okay.
Personally.
We'll have another webinar where I'm going to bring you in and have you speak to us, right? Thank you very much. Really appreciate that point. Now I want to go to Sakar for a very quick touch base. From where you are sitting, what is your opinion about the FDI policies in retail in India? Do you think there are some tweaks that will help encourage bringing in more investments and creating retail malls of the future that we are talking about?
So I think there has been no significant change in FDI regulation in past few years. I think the only expectation for the industry is that they need to allow single brand retail, because multi-brand retail we already have. If you see a typical mall, you will struggle to fill a 1.5 million square foot mall. I used to manage two biggest mall in Mumbai. So they both were 1 million square foot each, and effectively there would be hardly around 400 to 450 tenants in India. So if there are two adjacent malls, you will find 60-70% of the shops are similar in both the malls. So we need to desperately increase the number of tenants who are available to occupy these malls. So I think that single brand retail will help it. And what I've been tracking this sector for long, and I have been hearing for ages that they will allow these. There are approvals which are pending with government authorities, but approvals are not being given. So once we have those approvals, probably those number of tenants should increase. And then effectively you will increase your trading density in a mall. How will you rotate a tenant if there are no tenant available? So that way,
I'm talking about apart from the single brand outlet issue, which is a big issue. But there are also a lot of governance and restrictions about e-commerce companies and the relationship with the suppliers, percentage they can buy, and so on and so forth. Do you think those are, in your opinion, restrictive to free market, or is it something that we require at this development stage of the country? What's your opinion about this?
I think we require, if I can give you an example of China, say Alibaba is an online player there, and Alibaba also occupies a significant space in malls as well. Very limited space, but effectively, like you say, this is an omni-channel presence for all these retailers. So probably, I think if you are asking that way, probably we may need similar regulations in India so that Amazon, Flipkart, they all are able to occupy these space and they can expand, because they will have more offering to give to customers, and customers will also enjoy the experience. But if you see, Indian players are actually doing it. If you see Nykaa, Lenskart, they all are effectively present online as well as they are occupying space in malls. So I'm not sure why these overseas players should be restricted. Yeah, from that angle, probably I think if regulations are a bit relaxed, then probably we'll have better retail offering to customers.
Thank you very much, Sakar, for those comments. I'm going to try and move on very quickly for a short conversation about the hospitality sector. Now, I have personal experience of staying in some of the NCR hotels, and post-COVID, I could get rooms at 25 to 27% of the average rates. I'm not even talking about the peak rates. And you can go to booking.com and look at the hotel rates. I didn't even dare to look at it during April because I have nowhere to go. But up until March, you look at this, it's a situation was bad. I do not know what the current pandemic situation is going to leave us with when we exit this situation. So the question I have really is, let me go to Sakar again. So do you think the hospitality industry is facing a long winter? And what do you think is it going to be a long winter? How long is it going to be? Is there anything that is going to happen that will creatively kick in? Like, for example, during the COVID time, they kicked in this whole idea of staycations, that people in the same city will go and stay in a hotel and use the facilities and so on. So are there creative things that you see emerging? Is there a distinction between city business hotels versus non-business hotels, both in the cities and outside? So what's your broad prognosis on the hospitality industry?
So sector-wise, I agree with you that this could be a long winter for hospitality. If you see the sector per se, if you see the demand outlook for the sector, probably it hinges on three main pillars, would be mainly corporate, MICE segment, as well as leisure segment. So corporate demand might be a bit lower because non-essential corporate travel has reduced, and probably in future also might not be as significant non-leisure demand that we would have expected earlier. Even MICE segment, probably international MICE is effectively zero, and I'm not sure when it will recover because there might be some restrictions on around the in terms of having hoarding facility in these places. But leisure, we see a silver line. So if you see, domestic travel has actually opened up. So I think many guys here would be aware that Alibag is now considered as a new Juhu beach. So which are in motorable distance, people have started traveling. And Maldives is the new Goa. So if you see the data, Goa is one of the most resilient leisure markets. So that I have seen, and there is a phenomenon called revenge travel. So we have seen that in China, and now we are seeing that in India, that in leisure industry, probably people are traveling because they are fed up with this lockdown for so many years, so many months actually. So from industry perspective, I think luxury leisure will actually bounce back faster, and branded mid-market hotels may also bounce back faster. But I would say ADR and occupancy perspective, it will still be lower, and it will take some time to reach, I would say, pre-COVID level phase. And one of the main reasons is that we misunderstand what the return on ROE is. So from investor perspective, we say that it is return on equity. But from developer perspective, it is return on ego. So they have over-specified things and they have overspent on business, which is not required. If you have a, say, 5-star brand, if say Ibis or 2-star brand Ibis or a 5-star brand, say St. Regis, the price that they capture or command in developed markets is much higher than what they command in Indian market. And if you see as a Pullman in India and a Pullman overseas, they have overspent on those hotels, which is not required. I think if this pandemic can give some sense on overspending, then probably this industry might be stable. And hopefully I see that if we learn from our mistakes in the past, probably there could be light at the end of the tunnel. But I foresee that it might be in 2023 and beyond, not prior to that.
Thank you. I like your expression of return on ego. I will remember that, and I think I will quote this with your IPR to some people. Yeah, thank you. That was very good, gentlemen. We got another about 15 minutes or so. So I'm going to take up one more, segment, asset class, if you will, and after that, I got some questions which are a little bit outside of or agnostic to any of the asset classes. So the one question I have is regarding the industrial and infrastructure segment. There are a bunch of questions that are coming in my mind. I'm going to request Jai to make some comments on it. The kind of reference points I have are, what is the nature of opportunity that is emerging in this whole industrial area? Is China plus one strategy, which at some point of time, people are expecting that, a whole lot of manufacturing is going to beeline to India, so that there's going to be a lot of manufacturing capacity that will be created. So how real is that? Or is it real, but it's likely to take its own time? And the last question about that is, recently announced performance-linked incentive schemes of the government of India for manufacturing. Do these things have a real impact of giving a serious tailwind to this sector? Do you see a lot of investments coming into this sector?
So I think the China plus one strategy is something that's been going on for some time now. I think that a lot of global manufacturers have been looking at moving businesses out of China, not because of anything else, but just labor costs in China have been on the rise. I mean, the average, daily wage for a Chinese laborer has actually tripled in the last decade. And so the move away from China is something that's been happening purely for commercial reasons and not necessarily, political. Now, in the last couple of years, there have been, political angles as well. The US and Japan, have been sort of collaborating to say that they want to present sort of a brave, front to China. The truth is that I think, A, it's a slow process. B, there's a lot of competition, right? And I think that countries like Vietnam, Thailand, and Indonesia are doing a lot a much better job of attracting these manufacturers, there, in terms of very, very efficient set up processes. I think that we are still, your incentive schemes are fine, but just the kind of effort that it takes to set up a manufacturing unit in India is significantly higher than it would be in a place like Vietnam, Indonesia, and to some extent Thailand as well. And I think that the current pandemic doesn't help us, because it would, for people who are looking at where should they put their factory to kind of have a diversification, the fact that we've been hit with such a massive wave will stay in memory for some time, I would think. And so that's definitely not going to help, at least from a impression perspective for this. Having said that, I think that over a long term, we do need to do a lot to improve the just in terms of ease of doing business with respect to manufacturing is concerned. We have a huge population. This population is slowly but steadily getting more and more educated, so you're going from unskilled to semi-skilled. And that will, I think there's a natural growth, but I don't think we should expect to see a sudden spike in this sector.
Is it also true that even if that does happen, in terms of the manufacturing capacity ramping up, this will all be captive by the manufacturers themselves? They will do investments and they will do the ramping up, and it doesn't necessarily lead to an opportunity for a third-party investor into that space. Is that a fair assumption?
No, there's a whole ecosystem that goes around it, right? I mean, you look at a market like, let's say, Chakan in Pune. The whole ecosystem there was built because of Mercedes and Volkswagen coming in, and so the number of sort of suppliers. You look at Ahmedabad, where Anuranjan is, your market to the north of Bechraji, where you have a number of auto players such as Suzuki and Honda putting up two-wheeler, four-wheeler electric vehicle plants. They have close to about, from what I heard, Suzuki has close to 2,000 suppliers, right? And they were given, when the new plant was set up in Ahmedabad, they were given, I think, a 18-month to 2-year period where they were given a subsidy for logistics to transport their components from where they are currently to that plant. So all of them have to look for solutions to be close enough to the, and so while someone like a Suzuki doesn't need an ESR to invest, they would get the land from the government, they would build their own factories, they would own the factories, they want to be in control of that. A lot of the component suppliers, because maybe they're, let's say they have a contract for about 3 to 5 years with Suzuki, which may or may not get extended. They don't want to actually build their own facilities there. And so that's where someone like us comes in. We provide them with the space, and we expect that, that ecosystem is there for the long term. So it does create that entire thing. So you look at, Oragadam Sri Perumbudur in Chennai, huge ecosystem for various auto manufacturers, Bharat Benz, Apollo Tires, Saint Copain, Hyundai, even Royal Enfield, so on and so forth. They're just Renault, Nissan, there are a huge number of them there. So that definitely has, some of it will be, captive manufacturer investment, but there's a big spillover into OEM suppliers.
Thank you. That's pretty comprehensive. So I'm going to ask for just a 1-minute comment from Sakar on your perspective from where you're sitting. If you look at the large infrastructure projects in the country, do you think PPP as a model is a good model for the country to pursue? And if you are an investor looking at India as a potential destination for some funds on a PPP model, what will be your reaction? What will be your level of interest in?
No, I think, PPP model is the way to go. If you see many power projects in India, this is the way that many of the, renewable energy projects have gone. But the issue that we have faced is that the moment, because funnily, probably these agreements are not being honored. So there are few instances in power projects. I can give you an example related to power projects where PPP was agreed, and then when the regulation changed, or I would say when the regime changed of the new government came in, there were issues that were that the private parties faced issues in those regulations. So the government said that no, we will not honor the earlier PPP, and now you need to have a new PPP. So I think concept-wise this is good, but I think probably we may need some standardized system where there is no renege on the agreements that have been entered into.
Thank you. That's a very helpful answer. So before I'm going to be next moving to each one of you for some closing comments. I'm going to suggest a certain set of questions which I'm sure participants will be very interested in. But before I do that, I just want to address some questions which have come from the audience. One was the first question about the marketing for real estate, which we already called out. Second is a question about how to automate the real estate industry. Saloni Sharma, COO and Director, Roodland, India. I'm afraid that at this point of time, we will not be able to cover this particular question, but we will pass this question on to some of our panelists to get an answer for it. The next question was about future of office and commercial real estate. Fractional investment, currently an emerging asset class, could be followed by a bandwagon effect and then shakeout. Should we have regulation in place for this asset class? I think this was partly covered. And if there are any other elements of this, we will try and send answers to this. This was asked by Rajendra Bhatt, partner, Green Global Reality. The last question is, what is going to be the impact on office leasing in tier 2-3 cities with work from home becoming more common? This was asked by Mr. Hemant Jain, Director of ANNA. I think this question has been answered in multiple ways through the forum. So I want to thank every one of you who has really written to us and asked these questions. Really appreciate your interest in the conversations as well as participating into the questions. I hope you got answers, if not exactly directly, sharply answering your questions, but broadly the areas that will probably help you get an answer to your questions. Now we are going to the last section of this. I'm going to be doing a little bit of a closing comments from each one of the panelists. I would really like to look at it, the following aspects in your closing comments if you can. And of course, you are free to add to other closing comments that you can have. One is overall attractiveness of India as a destination for PE investments. Second is ESG, environment, social and governance, is it an important criteria for investment decisions that you make? Do you think it's gaining in importance? And what is your comment about it? Third is your firm specifically making investments in India in various real estate assets? And if so, would you be able to share with us what kind of asset classes are you currently investing? Of course, if this is a confidential information, you are free not to share, but I'm giving you these points for you to consider in giving your closing out comments. So I'm going to go in the same order in which I opened the session. First with Anuranjan.
So, on closing, I will say that the future of real estate is extremely bright now. People who are bargain hunters, they will be seriously disappointed, and they will suddenly see that there is a huge surge in demand, huge surge in prices, and they may miss whatever they were expecting. Probably next 1 or 2 years, we will see one of the brightest, I will say, market, what we have seen in the last 8-10 years. The reason is very simple: huge pent-up demand, extremely low interest rate, and huge, I will say, economic recovery across globe, including India. So we are extremely bullish, and I think the future of real estate in India is extremely bright.
Thank you very much. I really appreciate it. I think you've been maintaining that bullish stand all through, and I cannot wait to get you back on a panel very soon. I'm going to move to Jai. Would you like to give your comments? I think Jai is probably frozen. There's probably some technical problem. Can I move to Sakar and I'll come back to Jay afterwards?
Yeah, sure, Raghavan. So I think from India perspective, probably we are very bullish on India. Multiple factors: GDP, consumerism, demographics, purchasing power, talent, availability of talent. So effectively, CDC invest in Africa, or 54 countries in Africa and around 7-8 countries in South Asia. So whenever we go to our global committee, we need to justify our cost of capital for a particular country. So effectively, India is actually right at the top of our investment horizon. And focus is mainly for real estate asset class. It's affordable housing is a focus area for us. Warehousing is a focus area for us. And all the new alternate asset classes like student housing, co-living spaces remains a focus area for us. Office, retail, hospitality, we may look at it, but I think not currently. I think the asset classes that I mentioned is the current priority, and probably later part in next few years, we may look at other asset classes. And ESG is a core for CDC. So to give you an example, if suppose we are making 35-40% IRR on an investment, but our ESG diligence throws a few findings, then probably we will not be doing that diligence. And it is important from the perspective that you need to contribute to your environment. And we have recently, UK government has recently signed the Paris Accord. So from that perspective, environment becomes a very important aspect for us. For all real estate investment, we generally stress that there should be a LEED certification or H certification, which is done by IFC, so that you have greener buildings. So we try to justify to the investors that if you have greener buildings, probably now there could be commercial advantage as well. Apart from the environment advantage, your cost will be reduced. You will have effectively green loans also available to you, subject to you achieving a particular size. So probably the commercial advantages are also now more visible to developers. Probably earlier we used to face, we need to really convince the developer that this is advantages to us from environment perspective, which probably may not give commercial sense to developers. But now when there could be green loan availability, probably they are more tuned to follow those regulations which we generally prescribe. Yeah.
Thank you very much. That's very comprehensive. Appreciate it. Jay, I think you are back. Would you like to make your comments?
Yeah, I think that, overall, I think our viewpoint for India is long term. As Anuranjan said, one of the biggest factors is is our market size, and the fact that we are on, while there might be certain blips, but we're on a general upward trend with respect to disposable income, with respect to consumption, with respect to urbanization. So, given the fact that ESR is a purely logistics, warehousing, industrial developer, that's our only area of focus. We have been very actively investing over the last 4 years, and we will continue to do so. We're also looking at data centers, cold storage, as asset classes that fit well within the same strategy of consumption and and urbanization and disposable income. I think ESG for us is something that we need to, as developers, we actually need to make it happen, right? So we're not a capital investor. We're a developer who also manages funds. That's how I like to think of us. And so we've been, we're one of the I think globally we have a very strong sort of human-centric mandate, right? So it's with respect to creating spaces, even though they are warehousing, right? Creating spaces that actually cater to holistic experience for for the people who work in those spaces. So all our buildings are IGBC Gold or better that we've built in India. Our investors, who are sovereign wealth funds, insurance companies, pension funds, demand that we meet certain criteria. We're a member of the Global Real Estate Sustainability Benchmark, and that looks at environmental, social, and governance aspects. And every year we strive to improve our ranking on that. So it goes without saying. I think for us, ESG is something that we need to make happen, and not something that it's not an option.
Thank you very much, Jai. That was, again, very helpful. So I'm going to kind of go and wrap up this session. I'm sorry we could not touch upon healthcare sector as an education institution sector due to paucity of time. And I also want to acknowledge Mr. Sharad Goyal, who has written up some questions here on senior living projects. I know that we have not been able to specifically answer some of the questions in this section, but we will try and send these questions to the panelists and get you some answers. But at this point in time, I want to thank Mr. Sharad Goyal, who's asked some questions regarding senior living. I also want to thank Ankur Chawla, who's asked a question about gated communities. There are a couple of questions from people whose names are not known here. It says as anonymous attendee, maybe they forgot to write their name. And then I also want to thank Mr. Vaibhav Jatia, who's asked some questions regarding PE funds that will specifically look at underdevelopment projects in the hospitality sector. So we will try and get some answers to all of you. But right now, I just wanted to call out your names. I want to thank you for raising these questions, and you will get some answers from Blue Circle. So with this, I want to thank each one of you, Anuranjan, Jai, and Sakar, for taking the time and participating. I want to thank all the Blue Circle members who have taken the efforts to join us today. And I'm sure that many more members, thousands of them, normally end up seeing it post this on the recording. Really appreciate that. And I really appreciate the opportunity to have to be able to talk to all of you on this very important sector of the Indian economy. So thank you very much. And I want to hand it over back to Siddharth Anand, founder CEO of Blue Circle.
Thank you very much, sir. Such a deep and insightful conversation, and such a privilege to hear you all and to learn so much. Our leaders and I took home several nuggets from the conversation, and how well moderated Mr. Raghavan. I really wish we had some more time. And thank you to our leaders in the audience for joining in and for staying till the end and for sharing excellent questions. For the questions, as Mr. Raghavan also mentioned, that which have not been addressed due to paucity of time, I will share the relevant questions with the leaders on the panel and request some of their time for it. Along with our weekly webinars, we will soon be taking these discussions and many other features live on our exclusive mobile app, which is curated for senior leaders across our 6 sectors, which are real estate, logistics, e-mobility, healthcare, energy, aerospace, and defense. So whether you would like to engage with us on our platform as leaders or are invited to connect with us for membership and join the real estate circle and also get access to our other allied circles, please do write to us. Thank you very much once again. We look forward to having more such discussions, and please stay safe. Thank you very much.
Thank you, everyone.
Thank you, everyone.